Hello students, welcome to this video session. So in entrepreneurship, in the last session we have been introduced to the resource mobilization. We saw what financing is and how much money is important for running a business, starting a business, and to continue the operations and to expand the business and everything. The above points make it clear the reasons why we have to depend on finance for any business, whether it be starting, running, or even to purchase another business, so on and so forth. So the important questions that needs to be asked for any firm is how much money is required, where the money will come from, and when does the money be available for investing in the business. We will see a case study. Air India is one of the biggest commercial airlines in the country. Actually, it is the very first commercial airlines that has been started by the Tata family about 100 years ago. So, but presently the company is not doing so well. The company has defaulted on working capital loan interest of rupees 200 crores due to financial crisis that the airlines is facing. So basically the company is being managed not so well. So presently the total interest plus loan amount that the Air India has to repay to its stakeholders is nearly 40,000 crores. So Air India is facing a tight financial situation and it is in talk with the lenders to restructure its debt of rupees 40,000 crore. So even the restructuring is not going to be enough if you have to pay 40,000 crore and you're not having enough profit year on year. So the employees even went on strike for non-payment of salaries for many months. So therefore the stakeholders decided that it will be wise to reduce the total debt or interest that has been given to the company. Therefore they have came to a decision to reduce the debt and to interest. So reduce the debt that has come from overseas. That's been mentioned there. So financing is always difficult for entrepreneurs, especially new entrepreneurs. If an experienced company like Air India is suffering so much, you don't have to imagine how much a new entrepreneur that is stepping into the business for the first time will face. It needs highly experienced individuals and also some luck to stand in the business without being a part of a financial crisis. So we already have mentioned the various sources in from which in 11th grade about the various sources from which an enterprise can raise required funds. Required funds refers to the capital that a business needs to perform its operations. Raising refers to obtaining that funds. We know by now thoroughly the ways of raising funds can be classified into two major categories, that is internal and external resources. But you can ask whether, well, if it is all the same, is it the same as obtaining a loan from a bank, or as much as to obtain some funds from the public, or to issue debentures, or to issue rights shares, or to issue other forms of funds such as venture capitalists or angel investors. Maybe they all will be able to raise the required funds. Let's say if you need 10 crores for your business, all of them could be able to raise such fund and give it to you for running the business. But what they ask for in return changes depending on who they are. So the obligations, the responsibilities, and the opportunities that is being presented by raising those funds are very much different, because the opportunities that you will have when you raise funds from an angel investor will be not so much compared to when you raise funds from the public, because public issue offers you an open door for doing another public issue in a few years period, but angel investors need to be convinced so much before doing another investment. So they need a return on their investment, they need a overvaluation of their shares, so on and so forth. So internal resources refers to owner's own money. In other words, it's called equity. What is owner's own money? It means you have invested 10 lakhs in a firm and in a business, and you start a business with the 10 lakhs, you buy some products and you sell the products, you hire some employees and you rent some business area, and then you're running that business in that business area. So for example, a warehouse or godown or an office, so on. So all of these expenses are met by the 10 lakhs that you have invested initially. So after making such investment and doing the trade for 1 year, you have a profit of rupees 2 lakhs. So you can either choose to take that profit and use it for your personal commitments, or you can take 1 lakh to use for your personal commitments and keep the 1 lakh remaining in the business. So that way your initial investment is 10 lakhs and your further investment is rupees 1 lakh for that year. Therefore the total capital of the business has grown to 11 lakhs now. But if you have used that 2 lakhs, all of the 2 lakhs for your personal commitments, there is no increase in the initial investment. Therefore if the owner chooses to use his own money, whether from initial raising or through the running of the business over the period, it is called owner's equity. Therefore overwhelming since for small entrepreneurs, small businesses, people who are initializing the business on the very first stage, they say that for small businesses it's not possible, but that's not totally true. Most of the business that has made it to the big have started small only. So not that every business is started as multi-crore businesses. Not everyone had that kind of cash in their hand to initialize as a multi-crore business. Every business has started small. Not every, but most of the business has started small and then attained a big future over the time. Therefore, small entrepreneurs, even if it is hard, they should strive to save some money and invest it in their business, therefore increasing the capital. Obviously when you increase the capital, you are increasing the resources. First, when you have if you have 2 employees at the beginning, if you invest 1 more lakh, you might be able to hire 1 more employee and give him 10,000 rupees a month. Therefore that employee will work more, therefore your profit could be more than original. That's how the individual or the original business entrepreneurs raise the net worth of their own firm. So in other words, if you do not want to opt to that option, you can alternatively obtain a bank loan, which means that you can say that I am running this business, I need a personal loan of rupees 5 lakh to invest further into the business. But the problem is that when you are obtaining a bank loan, you need to pay an interest, especially if you are obtaining a personal loan, the interest rates are way too high. Therefore, you need to make the decision of whether to save money and invest in the firm, or whether to utilize all the money and obtain loan from the bank. But if you are not able to pay back the loan, chances are the bank will obtain your assets once you go bankrupt. So there are huge chances for that. There are n number of people who has gone bankrupt and lost their homes and other possessions. Below given are some investment strategies made by multi-billion-dollar companies about other services, other companies. So Google has purchased Motorola Mobility for $9.8 billion US dollars. Microsoft Corporation purchased Skype for rupees $8.5 billion, not rupees, dollars. And Nokia handset and service business for $7.2 billion. As notable mergers and amalgamations of 2001, but yeah, further amalgamations has happened over the period that are worth way more than that, but still $8.5 billion is not a small thing. The later businesses were in financial crisis and the farmers were in strong looking for expansion strategies. That is true that the farmer businesses had so much money to invest and they wanted to expand their product, but not all the later businesses. Nokia and Motorola were in crisis because they were not able to sell enough phones as much as they were selling before. Motorola and Nokia both were one of the market leaders in selling phones in the past decade. We know of that how Nokia went from hero to zero. over time because of increase in competition, and Nokia was not able to sustain that level of competition. But Skype was not in such a crisis or anything. Skype was an up and coming firm. You know what Skype is? It's just the video calling and the conferencing application. It's just a software company, but the software company is worth $1 billion more than the Nokia brand itself. So that shows that how Skype has succeeded from the start of the business. And $8.5 billion is a considerably large amount of money for what Skype has worth at that point. But I must say that Microsoft Corporation is not actually doing so well after purchasing the Skype with the Skype application. So there are a few methods of raising capital for your business. The first one is capital market. Second, angel investors, venture capitals, specialized financial institutions. If you are a smart investor or if you are a smart entrepreneur, you should know that the order of arranging as a matter of convenience for your business is exactly the opposite. First, you will go for specialized financial institutions, and then venture capital, and then angel investors, and then only capital markets. You simply cannot expect those capital markets to invest on your business at the beginning itself. But let us see what it is. Capital markets, at times we have people that have money and they do not want to spend the money rather save for the future. That is a smart move, to save for the future than spending it. Spending does not only mean that you are incurring an expenditure, buy a car or a home or something that you want to enjoy your life on. That does not mean spending. Even investing on a business is called spending, because you are spending your money on another business in hope that you will get a return. But what if you do not get a return? That is a question of fact. There are a lot of people who has lost their money investing. I'm not discouraging you from investing. I'm just asking you to consider the possibility of the losing your investment. So it is worthwhile to consider what are all the risks associated with the business that you are investing in. Therefore, on the other hand, there are other people who want to spend the money to undertake some economic activities, which is starting a business, but they do not have the required amount of finance. So the people who require the finance will go to the people who want to save their money, and they ask the people who has the money to invest in their business. Obviously, that's not one person. That could be 10 people, that could be 20 people, that could be even 1,000 people. You can ask 1,000 people to invest their money in your business, so you can perform something productive and increase their net worth in the process also. So that is commonly called capital markets and how capital markets function. In other words, if you have, let's say, 50,000 rupees and it is the year 1999, okay, if you are a college student or something, or someone who is enjoying his life with 50,000 rupees in cash, maybe you want to buy a bike or you want to buy a car. Let's say you want to buy a bike, and let's say you are buying a Royal Enfield. Okay, 10 years or 20 years later, in 2020, what will you have? You will have spent 15,000 rupees in 1999, and you have a really old scrap metal that is not usable anymore. That is a Royal Enfield bike, 20 years old. So that's all that's remaining of the 50,000 that you had spent 20 years ago. But if you are smart and if you have invested the same 50,000 rupees to purchase the shares of Royal Enfield company in 1999, your net worth would have increased by 1.5 crores in the 20 years time period. So that is the power of investment. And not just that, let's say if you have invested 1 lakh rupees in Apple in the 1980s, in 1985 or something, 35 years later your net worth will have increased 300 times, which is 3 crores. So 1 lakh will change into 3 crores in 30 years. No other any other business technique will give you that kind of return. You cannot just lend money to someone and ask them to repay 300 times more, or you even cannot it's not easier to do a business on that scale. So but capital markets make that possible. And not only, you don't even have to invest for a longer period. All you need to do is to invest in the right company at the right time. For example, Let us take the IRCTC's IPO. IRCTC is the Railways Transportation Company in India. So it has released its IPO in 2019. And if you have 10 lakhs to invest, and if you have invested 10 lakhs in the IRCTC, when they have, at the moment that they have released their IPO, on the very next day, your net worth will have increased by 6 times to 60 lakhs. So you have increased your net worth from 10 lakhs to 60 lakhs in a matter of days. So no other amount of business can offer that kind of return on investment, but capital market makes it possible. Therefore, investing in the capital market is not so bad if you have done the enough market research. We will see how to invest in capital market and what are all the functions in the upcoming sessions. Thank you very much.